Good evening. Welcome to We Mean Business, and our top focus today is on the long-awaited new bank license guidelines. The Reserve Bank of India today issued the final guidelines for new bank licenses, which say entities notwithstanding which sector they're from, and both from the private and the public sector, shall now be allowed to apply for a license. Lots of interesting takeaways and surprise elements to discuss from this announcement. So joining us to make sense of what this really means for the sector, well, we have two live guests. Sanjani Kumar, Director at PricewaterhouseCoopers, joins us here in our Mumbai studios. Naresh Maghjani, Partner at KPMG, will join in a bit. I also spoke earlier to three license hopefuls: Bharat Doshi, Executive Director and Group CFO of M&M; Sunil Godwani, CMD of Religare Enterprises; and Ajay Srinivasan, the CEO of Financial Services, the Aditya Birla Group. But before we actually listen into all these people and begin the discussion, our financial policy editor Ira Dugal with the fine print of the new guidelines.
After a wait of nearly 3 years, the Reserve Bank of India has finally put out the guidelines for new banking licenses. It was almost 3 years to the date that Pranab Mukherjee talked about the need for new banks in the budget of 2010-11. Since then, the process has gone through various ups and downs, and finally the guidelines. This is what the guidelines actually say. They put down the eligibility criteria as private entities which are owned and controlled by residents, public sector entities and existing NBFCs, which basically leaves the field wide open. Corporate entities can now apply for a banking license. Even corporate entities linked to sensitive businesses like real estate or brokerage can technically go ahead and apply for a banking license. But the RBI is going to apply a very tough criteria known as the fit and proper criteria in deciding who gets a license. They define that by saying that these entities must have a past track record of sound credentials and integrity. They must have a successful track record of 10 years, and they will seek feedback from other regulators, the Enforcement Department, the CBI, the IT Department, to judge whether these are fit and proper entities. In the previous draft, they had actually taken out entities linked largely to real estate and capital markets. This time, there's no such classification, but there's a very clear quote where the RBI says that promoter and promoter group businesses should not potentially put the bank and the banking system at risk on account of group activities such as those which are speculative in nature and subject to high volatility, which that tells you, if you read between the lines, maybe the RBI would still be uncomfortable with real estate or broking linked businesses, but that is up to the RBI's judgment. The corporate structure for new banks, it would have to be through a non-operative financial holding company. This would hold the bank and other financial service entities. It would also be ring-fenced from other group activities, and that's going to be an important criteria. The RBI says they have to be satisfied about that ring-fencing and also about their ability to actually supervise the bank. Exposure norms are important. They say that the holding company must not have exposure to any group entity, or actually for that matter must keep an arm's length approach with the promoter group, key customers of the promoter group and key suppliers of the promoter group. Capital and shareholding along expected lines. Minimum capital is at 500 crore. The holding within the holding company has to be 40% at least for a period of 5 years. If you're above 40%, you have to bring it down to 40% in 3 years. Shareholding has to be brought down to 20% over 10 years and 15% over 12 years. Listing is mandatory within 3 years. Foreign shareholding has been restricted to 49% in these banks, at least for the first 5 years. Rural exposure is something that's important because the idea behind these licenses was financial inclusion. So these banks will have to have 25% of branches opened in unbanked rural areas. Finally, how is this process going to play out? Take your application, go to the Reserve Bank of India, they'll screen those applications, they'll pass it on to a high-level committee which will look at it, give its recommendations to the RBI, and then the RBI will take a final call on who does or does not get a license. It would probably be a process that would last anywhere between 6 to 12 months.
Here, thanks for getting us that comprehensive fine print of those guidelines. But with that, let's listen in to some of the hopefuls that we've been speaking to. I spoke earlier with Bharat Doshi, the Executive Director and Group CFO of Mahindra & Mahindra. I began by asking him for his initial reactions to the norms.
No, I think it's a fair requirement. If somebody wants to be in the banking business, then an adequate capital ought to be provided at the outset, and not that something which will be raised later. And I think it's a fair proposal.
So, but there was a general sense that, it could be a little bit more than 500 crore rupees. Do you think it was lower than what you expected?
What I'm delighted is that the emphasis by RBI, particularly on good governance, on sound track record and on integrity on one side, and simultaneously has talked about rural presence, has talked about inclusive area, and that delights me most because Mahindra Finance is a company which qualifies on both these criteria.
So which leads me to my next logical question. Are you going to apply?
So that's like all the necessary safeguards required, and that's why they in themselves brought that you will not lend within the companies in the group, or the safeguards which will come in terms of how your asset allocation will take place, how the priority.
All right, there's some technical error over there. We'll try and fix that. But I also spoke earlier with Ajay Srinivasan, the CEO of Financial Services at the Aditya Birla Group. I, of course, began by asking him for his initial reactions on the norms. Listen in.
So we welcome the norms. I think the norms allow for quite a change in financial services overall in India and will promote the cause of financial inclusion.
Sir, you know, the norms also state that businesses should not put the bank and the banking system at risk. That's what the norms state. How do you read into this? Is there a general sense the Reserve Bank of India would be very, very strict in picking who they give the licenses to?
I think that's a statement of intent. I guess there are a number of things in the guideline that obviously allow this in terms of the kind of experience that the promoter has to have, the kind of structure that will be created, the kind of supervisory powers that the RBI will have. I think there are a number of elements in the guidelines that will support this intent.
And of course, I also spoke to Sunil Godwani, the CMD of Religare Enterprises. I began by asking him whether Religare is going to apply given that the final guidelines are out.
We have always expressed our interest that for Religare Enterprises as a fully integrated one-stop financial services house, it's natural to evolve as a bank. We have the guidelines. We'll go through all the other details and the fit and proper definitions that RBI may have, and definitely we are very keen to apply for it.
But sir, the norms state that current businesses should not put bank and banking system at risk. The same question that I asked Mr. Srinivasan, how do you read into this? Is this going to mean that the RBI is going to be very selective in picking who it gives licenses to?
Basically, what they are saying is that they don't want any systematic risk. So the non-operative holding companies will cover all the financial services, and there will be no lending allowed to any group company. So a bank cannot be used to lend to your own companies, which is from a governance standard. They've also said that there will be independent board, which is absolutely fine. So what they are basically saying is they're ensuring that a new bank that is being set up today in an environment which is challenging anyway, there is absolutely very little chance or no chance for any systematic failure from any side to a bank, which I feel is very positive. Again, I mean, whatever is being put forward is the right thing to do for the industry. You don't want a bank failing, which will be a very negative aspect to the whole sector there.
And sir, your reaction on the initial sort of capitalization, 500 crore rupees, is that a little lower than you would expected?
The capitalization is a function of plans. I mean, they are very clear. It has to be a financial inclusion. So I would say to put up a meaningful bank and also achieve the financial inclusion as specified by them, it's an appropriate amount. However, it depends on specific business plans that are put together. But a 500 crore capitalization at a minimum level, I think is pretty fair in expectancy,
Sir, in terms of exposure norms, they state that the bank cannot invest in debt, equity, promoter holding, and also have to maintain an arm's length distance as far as suppliers are concerned. How do you react to that?
No, which is what I just said. So if you are a bank, you cannot invest in yourself or any of the companies related to the promoter, which is normal. I mean, that is what would be expected. So this doesn't come as a surprise at all. Anyway, even today, there are norms in place, concentration norms in place if you are investing in related parties. So as a bank, you would be expected that you would not fund yourself from any aspect, which is a pretty accepted norm, I would say.
And finally, sir, of course, the whole issue of 25% branches in rural areas, do you think that's going to be a hurdle for some of the players at least?
Well, there's always a challenge. It will be a challenge, but that is what the norm is, and one will have to comply with it. From a Religare perspective, we have always expanded more in Tier 2, Tier 3 cities, and we feel, that a lot of technology use will be required to really penetrate for true financial inclusion. Again, that is what they want. One will have to build a business plan around it.